Right, so this is the chart of the USD MYR pair, and instantly you'll be able to see the performance of the ringgit or the underperformance of the dollar, right? The past 3 months, USD MYR has fallen by 12.3%. If we look at it a different way, the ringgit is actually up by 13 to 15%. Up to a 3-year low or 3-year high of 4.09. In fact, this target was hit just last Friday. Now, this week itself, the ringgit has retraced, the US dollar strengthened over 3%, and USD MYR has gone back up to 4.2150, which is still within a lot of analysts' targets. Yeah, before this, analysts were targeting 4.4 or 4.5. Yeah, the most optimistic one, they were targeting 4.2. Now, right after the ringgit has blown past the 4.2 region, right, MIDF came out and released a report and said that, hey, by year end, ringgit most likely is to hit 4.03. But just take a look at this volatility over here. Yeah? A foreign currency pair to lose 12.3% in 3 months and then gain another 3%, over 3% in the past 5 days is just insane. And the retracement comes as escalations in the Middle East, right? Middle East itself, Iran on Wednesday, early Wednesday, they've launched more than 200 missiles towards Israel in an effort to sort of escalate the global conflict. Most of the missiles, they were intercepted, fortunately, and the Israeli Defense Force said that this attack will have consequences. And global markets, they were rocked. The dollar and gold rose. Investors began to pivot to safe haven assets. Meanwhile, stocks fell. Yeah, if you look at the FBM KLCI, FBM KLCI has also since retraced. Previously, at the end of August, right, it reached a 2-year high. Then more recently, due to the conflict itself also, right, it has gone down by 1 to 2%. And the decline is led by major stocks such as Maybank, Public Bank, and CIMB, which in the past few weeks itself, these assets have retraced by 5 to 7%. Meanwhile, if we were to take a look at gold, gold has been on a roll recently, yeah, since the start of the year. In fact, it's up almost 30%. Now, gold is typically priced in US dollars, which is sort of like a double-edged sword for us Malaysians. If you're one of those who invested in gold during the start of the year, right, then your profit in ringgit terms is actually only about 18.51%. Because we also have to factor in the appreciation of the local note itself, right, since the start of the year. But then again, with this escalating tensions as well as a geopolitical conflict, don't forget Ukraine, Middle East, etc., right? Experts, they believe that gold is likely to rally to another new all-time high, possibly hitting $3,000 an ounce before the end of the year. Now, what I'm trying to show you guys within these charts itself, right, is just how volatile markets can be, yeah, from time to time. Sure, they'll go up in one direction, right? They'll rally, and then after that, you'll see a huge retracement. So if you're not familiar with trading the markets, you're not really a trader, right? Don't chase the market. And better yet, don't trade currencies, because a lot of people would have lost a lot of money over here, right? And if you're investing, right, always have a clear strategy. Now, a lot of people say this, but I tend to think of it this way. And make sure you have a separate goal for each type of portfolio that you want to have. Okay, so give you an example. Somebody who is investing for retirement in the next 20 to 30 years, they can afford to invest more aggressively compared to someone who's saving up for a wedding in the next 2 to 3 years. And this is all covered extensively in our recent Spotify session with two financial experts, Han Liu and Sunny Hamid. Now, talking about a portfolio, I want to share a bit about my own allocations, my own investment. This one is my retirement portfolio. Okay, the first thing that you will see is that it is 25% allocated in US. Now, as for the US, well, it's the biggest economy in the world, has the largest stock market. If you look at the top 10 companies, right, in the world, right, the majority of it belong to US. Yeah, Apple, Nvidia, Microsoft, Google, all these familiar names. But my approach when it comes to investing in the US is not by stock picking. I don't invest in Apple. I don't invest in Microsoft. I invest in all of them. Specifically, US exchange traded funds or US ETFs that track at the US stock market. And this one can be like QQQ, VTI, or VOO, so on and so forth. And I'm doing it this way because why invest in one stock when you can invest in 100 or even 500 of the best US companies? That's essentially the indices lah, okay? And another way to think of it is that how sure are you that Apple or perhaps Microsoft or even Google will retain its dominance, yeah, within the next 20 or 30 years? We all know previously trends change, consumer preferences change. A company's dominance will definitely not last forever, lah. Yeah, which is why I prefer to invest in US ETFs. Now, when it comes to the Malaysian side, right, I also allocate 25%. And that is specifically in banking stocks, local bank stocks such as Maybank and Public Bank, because these two are the largest allocations of EPF. And I also have a bit into tech stocks, say maybe TIMECOM and INARI, because these two are sort of like within the semiconductor slash tech industry. And with Malaysia's recent boom in data centers, well, we might want to jump in a bit on that. Okay, that's my approach. And you also see EPF over here. So when you are calculating your retirement portfolio, right, it's essential for you to include your EPF portion. Yeah, why? Because this is sort of like the low risk portion within your portfolio. If you don't put in EPF, right, you can see that now your entire portfolio becomes a little bit more conservative. Now you have to allocate another 20 to 30% into safe investments such as ASB, ASM, FDs, right? But if you start to factor in EPF and you tell yourself that, hey, EPF works as my safe investments, then you can explore a lot of different types of riskier and potentially higher return assets, right? So next one is gold and Bitcoin, right? These one are scarce assets. Gold, I'm sure you guys know the performance recently has been amazing. Bitcoin also deemed as gold 2.0, so why not just have a bit of that lah? And the remaining 10% is allocated in overseas investments, specifically spread between countries such as Singapore, China, Taiwan, etc., etc., just to have a bit of diversification. So when you look at this portfolio as a whole, number one, it's actually very well diversified. Okay, and the key to diversification is so that if the Malaysian section underperforms, you sort of have like the US section or maybe even your commodities section to cover up your losses. Now, sometimes if Bitcoin outperforms, right, they may even quote unquote carry your entire portfolio, right? And as the market progresses, you just rebalance it from time to time, either quarterly or perhaps yearly or whatnot. Now, when it comes to overseas investments, right, nowadays a lot of apps they offer you different types of opportunities. Okay, and these two are my favorite options. I'm not sponsored by them, by the way. So the first one is Touch and Go Invest. It's within your Touch and Go app. You just open investment and you'll be able to see different types of funds. Conservative, moderate, aggressive. For me, since I'm an aggressive investor, they are I think 10 to 15 different types of aggressive funds. And the top holdings, you decide what sort of exposure that you want to have. And for instance, this Islamic Enhanced Opportunities Fund, right, offers exposure in Tenaga National, Nation Gate Holdings, Harta Lega, so on and so forth. If you want to have like a more global exposure, perhaps you can take a look at the Global Titans Fund, right? But make sure you spend the 5 to 10 minutes to click on this fund info and read the fund's prospectus. Okay, don't just follow influencers blindly. Don't just follow your friends blindly. Okay, spend the 5 to 10 minutes to look at what sort of exposure do you want to have, and more importantly, what are the fund's historic returns. Now, 1 year, if it returns 40%, it may seem good. But if you look at the 10-year historic returns, if it has been returning 2 to 3% or worse, negative, then you might as well just put that money in EPF, right? So that's why you have to do a background check on each of these funds. Now, as for Versa, what really piques my interest is Versa SGD, because you have exposure to Singapore denominated assets, and the majority of it is allocated into Singaporean banks as well as fixed income assets. So these are the things that you guys can explore. Right, so let me move on over to EPF. Now, this one is a bit of an interesting topic because recently somebody posted about their KWSB account saying that, oh, they've managed to accumulate 450,000 ringgit at the age of 43 years old. I'm not sure if this is a trend these days, but I've been seeing a lot of posts like this. Anyway, he proceeds to say that, oh, if you want to reach over 1 million ringgit by the age of 55, here is what you need to do. And the first thing he said, well, you must have a salary of 7 to 10K, which drove a lot of people off this thread because the reality is that the majority of Malaysians, our salary is way below this range. In fact, the median salary of Malaysians as of March is about 2,600 to 2,800 ringgit. And so this is already quite impossible to achieve. Then the next one, it says, oh, you got to invest 30% of the funds in your EPF account in order to get 8 to 10% returns. This is actually quite a good approach. But then he proceeds to say that, hey, guess what? You need a unit trust consultant, and I'm the unit trust consultant. So there's nothing wrong with this thread. It's just that I feel it's not really accurate. Okay, if you take up a compound interest calculator, you can even calculate this yourself. You will hit 1 million ringgit in EPF with just a 2.5k salary within 31 years. If you start with a salary of 2.5k and you are currently age 24, you manually save about 425 ringgit. Without salary increments and inflation, this means we are going to assume your salary stays this way at 2.5k for the next 31 years. Which is why I decided to leave out inflation also, assuming both are net. You will have over 1 million ringgit. Okay, and here's the breakdown. Okay, salary 2.5k, you will mandatorily contribute 11%, which is 275 ringgit. Your employer contributes 13%, right? So FYI, for those people whose salaries are below 5k, your employer contributes 13% of your gross pay. If your salary is above 5k, your employer contributes slightly lesser, about 11 to 12%. Okay, in this example, your employer contributes about 325 ringgit. Then your manual savings is 425 ringgit. So the total after 31 years, you would have accumulated about 400,000 ringgit in initial capital. The remaining 600,000 also ringgit also, that is interest earned. Okay, so we're not even talking about 7k salary, we're just talking about 2.5k salary. Okay, and you may have some questions like, hey, Sinji, what about investing with 8 to 10% returns, like what you said just now? Sure, this is good. Okay, it's important for you to explore riskier assets, but only if you know what you're doing. Okay, a lot of times people tend to follow their friend's unit trust agent, right? And most of the cases, right, those unit trust agents, well, I hope there are no unit trust agents here tonight. Majority of the time, these agents, right, they work for themselves. They have a KPI to meet, and they will sell you a product that they are affiliated with. And this is what happened. Recently, a few months ago, I wrote a thread about EPF, and one of our followers messaged me and asked me what should I do in this situation. Well, the initial thing that you should do is to do much more research. Look into the funds that your unit trust consultant slash agent is trying to recommend you. And more importantly, take a look at their historic returns. Had you done that research, take the 5 to 10 minutes, right, to do it, you may not have be in this situation. Okay, and the next thing is don't blindly follow influencers or your friends. Okay, so yeah, what if you're not so young anymore, right? What if you are no longer age 24? In this case, this is a table for you guys. Let's say you're 36 right now, okay? And you have about 61,000, or better yet, more than 61,000 ringgit in your EPF account. And every month you contribute within this range or more than this range. Well, in this case, you got nothing to worry about. By the age of 55, you would have hit 1 million in your EPF account or exceed it. Okay, so just take a look at this table. As long as you have the average savings and your contributions are within or exceed this range, you've got nothing to worry about already. Okay, so yeah, the big lesson for the next session, well, take it step by step, save whatever you can, start as soon as possible. I've shown you guys a chart of how compound interest works. Okay, it really quickly adds up. Yeah, so if you haven't been saving and investing at the same time previously, well, it's a good time to do it now. And more importantly, don't compare with others. Okay, because if you look at someone else's KWSP account and then you compare it with yourself, right? Probably right now you have about 30k, and then someone has 1.1 mil already, you will definitely feel a bit demotivated. And when you feel demotivated, you'll be more prone to rash decisions. You'll be following someone else's advice without really doing your own research. Okay, so yeah, take it step by step, guys. So I can continue trading in Maybank share DSR as it's overpriced right now. Well, if you're saying trading, then I don't have anything to say for you. But as for me, I am planning to invest long term. So you think of it this way, okay? If you are investing in a stock for dividends, you don't really mind if it goes to 15 ringgit or if it drops to 5, right? Because every year you're just going to collect dividends. If it drops to 5, then that's good for you, right? Because you'll be able to buy more and accumulate more, right? So the approach that I generally have is that if your exposure is zero right now, if you always wanted to invest in Maybank, and then right now you're not invested in Maybank at all, you have 0%, then the best approach is to always go in a bit first and then see where the market goes. Let's say your portfolio 100%, right? You plan to allocate maybe I don't know, 20% of it in Maybank, and then right now you have zero. So maybe you can try entering 5% or even 7% at the current price, right? No matter what people say, whether it's overvalued, undervalued, or whatnot, just enter a bit and at least get a bit of exposure, right? That's the most important thing. And and then after that, see where the market goes. If it goes up, then great news for you because you've captured the opportunity already. But anyway, if you're investing Maybank in the first place, you don't really care if it goes up, right? Because what you're looking for is to collect dividends every year and reinvest those dividends. And in this case, you probably should invest as soon as possible, right? So my average is 8.10 right now, so set to DSR now for Maybank. Well, I used to think of it similarly also lah. And previously my average buy price for Maybank is about 8, sometimes even below 8, right? At 750 I already bought quite a bit. But right now at 10, if I'm looking at my portfolio and I'm underexposed, right, I will still buy more just to make sure that it is up to my target exposure lah, okay? So it's not really talking about price. It's not really talking about when to enter. We are talking about whether you are underexposed or overexposed, right? If your goal have 10%, your goal is to have 20% in Maybank, and then right now you have 30. Obviously, you're overexposed, right? Then that is a signal for you to take 10% off the table and then rebalance it to whichever asset that has lower weightage. Okay. But if you're saying, oh, my goal is to have 20, now I have 5, means you're underexposed. Then that is a signal for you to allocate more, maybe even top it up to 10 or even 15%. Okay. So yeah, hopefully this helps. And by the way, all of this knowledge that I'm sharing today, it's not by me, it's all I've gathered from the financial experts, yeah, the two advisors of the futurists, Han and Sunny, and you can listen to this in all of it in our podcast episodes. Okay. Shout out to all our Patreon members: CH, Andrew, Wendy, Alex, CC, Urshad, Caveman, Kelvin, Tommy, Jinkang, Adrian, JS, Wenyan, Dean, Duhan, Sufi, Faris, Alan, Jackson, Ryzen, Hudson G, Jeffrey, Lawrence, Lukman, Will, Jack, YC, Arif, Haziq, Jinden, Adam, Ashley, Sean, Jason, Putra, Alvin, Jaya, Jia Chen, and Audrey, as well as all of our learner members. Thank you guys so much for joining. See you guys next Sunday, 10 p.m. Bye. Good night. Stay safe.